then just maybe this was just a brief correction which resolves higher. Hey, good evening, traders and investors. Bennett Tyndall with TradingAnalysis.com. Hey, thank you all so much for tuning in. It's Thursday, November 5th, 2020. Earnings are upon us. Well, we've gotten through FANG. That was really where most of the fun was. We've got the elections, which we still don't have an officially declared winner as of yet, but it's become quite clear which party is going to take the White House. Now, this isn't a political statement, but a lot of market participants, a lot of analysts were kind of forecasting some potential tax selling going into the end of the year in the event that Vice President Joe Biden did take office and was the winner. At this point, it looks like we're still going to have a split Congress. So while Democrats maintain control of the House, as long as they don't take control of the Senate, we shouldn't have an issue with any capital gains hikes being passed. We should still get some sort of a stimulus. So overall, looking rather constructive for the markets. We are actually still in earnings, as you can see on the left-hand side of your screen to my right and your left. We've got the charts up and a watch list. We're taking a look. S&P futures currently we've got up there, but Peloton reported after the close. Peloton had to move up to 130, pulled back to around 117. Haven't had a chance to dive into the earnings report there. Overall, the chart still looks rather healthy. We're still mostly contained within an uptrend impulsive channel. So we'll take a look at that chart. We've got Roku. Roku actually had to move up to 253 when the earnings came out. It looks like guidance was a little weaker than expected, which perhaps is accounting for some of the move that you're now seeing back to the around 230 area. But overall, the options market was pricing at about a plus or minus $20 move. So we're essentially still contained within that expected move. Really a good looking chart there. I'll dive into the earnings report. Maybe we'll talk a little bit about Roku next week, because I do have two very distinct wave counts for Roku. One which does suggest that 200 will hold as support and we're going to push higher. And then alternatively, depending on how guidance actually looks, we do have a potentially bearish wave count, not necessarily bearish, but suggestive and indicative of perhaps some sort of a technical correction on the horizon there. And we've got also Take-Two Interactive. I had to move up to 176. Take-Two Interactive has been a nice, very well-performing stock from the March lows. We also had Electronic Arts. It looks like they had to move 130 into the close, down to 115 here on the earnings report. We'll dive into that as well, take a look. Trade Desk. So, keep these on your watch list. And don't forget about the fact that we do still have some companies left to report. Square had to move up to 191, now pulling back to 184. T-Mobile, this is an interesting move here in T-Mobile. So we closed here at around 117, as you can see on the chart. I'll go ahead and zoom in just a little bit there. After hours had some decent volume carrying up to that 128, now pulling back. Gold's on the move, so finally seeing a little bit of traction there. So yeah, let's go ahead and dive into it. What we're going to do here is we're going to jump into the good old-fashioned Motive Wave platform, and this is a fantastic tool that we utilize in addition with Optima and Thinkorswim by TD Ameritrade and many other tools in our toolbox, so to speak. And this is a fantastic software that allows us to host our analysis on a cloud basis. So essentially we have a repository so that any of our members who are also subscribed to our Motive Wave service can link their platform to ours, and the minute I hit the save button, so let's say I move a wave anchor, the minute I hit the save button, it does get sent out to all of our trading analysis clients who do opt in for that particular service. So if you're interested in learning Elliott Wave, it's a fantastic way to go. So let's jump into it here. We'll go full screen on the charts and just kind of take a look at where we've been, and we'll get off the weekly chart and take you down to the daily. And if you saw at the top of this video, we've been watching the idea that perhaps the move off of the September 2nd was just a wave 2 correction, part of a higher degree fifth wave that does have implications through 36 to 3,800, maybe even our upside objective near 4,000 in the S&P. Really not out of the question. Not out of the question at all. So getting off the daily chart, dropping you down into the 1 hour time frame. If you tune into our TA Live Wednesday live stream, which we host every Wednesday morning at 8:45 Eastern on Todd Gordon's YouTube channel, you'll know that going into Wednesday the 28th, we were anticipating a gap lower, obviously based on futures price action, and we had forecasted a 32.50 downside objective, and then our next downside objective was 32.30. As you can see, we have since found support off of those price points, and we are continuing to charge higher. It's been a massive, massive move since the election day, up 9%, 9% move in the S&P. Really rather remarkable here. So what we're looking at here on the down on the 1 hour chart is a very significant motive impulsive trend that seems to be well developed. Okay, you've got a nice progression of 1-2, 1-2s that does give you that typical acceleration gap and what's referred to as a third wave, which is part of a higher degree third wave. And we met the 2618 upside target. We're seeing a little bit of consolidation. We're viewing this as either 3-4 into perhaps a new print tomorrow. We'll get through today's levels into the open on Friday the 6th. At that point, we are expecting a bit of a corrective pullback. And that corrective pullback is actually one that we're going to be looking to take advantage of, because if we are gearing up for a third of a higher degree wave 5 situation, then we have some significant work to do on the upside here in the markets. If we just continue, you can see futures are pulling back just a little bit. If we do just open lower, gap lower, or proceed lower tomorrow, we can simply anchor that wave 1 there and look for any sort of a 3-wave pullback in this market, really to get long. At this point, if you just take a look at these 2 trend channels, and it's really rather magical to see this unfolding. Not only did we have the third wave, which was a 1.618 multiple of wave 1 of the same degree, or said otherwise, 161.8% of wave 1, that's where wave 3 ended, and that's a typical wave 3 objective. In fact, we have our own trading analysis specific version of the motive wave platform, as you can see down here in the bottom left-hand corner of the charts. And what Todd Gordon, our CEO and founder, has done over his 10 plus years of working Elliott and almost 20 years in the markets, he's identified very common fib levels that are often associated with various sections and portions of a wave structure or a wave count, and he's color coordinated them. So you can see blue is kind of your shallow zone, 3 is your most common. So here you've got that 16183V1 projection, your wave 4 right into that green 38% fourth wave retracement. So motive wave in combination with some of Todd's handiwork here with Fibonacci really kind of shortens the learning curve if you're interested in learning wave principles. So interesting development here. After we printed the October 30th lows, notice when we move up out of this channel, we back test the channel turned into support, and then we start pushing higher. And we've just kind of been playing pinball back and forth in this uptrending channel. And I'll look for a break down to the through the downside of the channel to start forecasting that second wave correction. Okay, so that's where we stand. We continue to remain bullish. Alternatively, let's say this isn't a 5-wave print into September 2nd highs, and that isn't wave 2. We've got an alternate wave structure and wave count, which is still valid based on the rules and guidelines of Elliott, and it tells us that what we just saw was simply a 4th wave correction, and we're still, in this particular interpretation, moving impulsively higher, up in 1, down in 2. So you could still see some sideways consolidation here before that resolve sets in, whether it's in a wave 2 situation or perhaps this morphs into a triangle. And this is A, B, C. We're in D, we get E, and then we move higher. So very, very excited to see where this market wants to take us. If you take a look at the Nasdaq as well as the Russell 2000, Russell 2000 small caps are looking very healthy here. In fact, I should have posted this on Twitter. I really wish I would have, but here's a chart that we looked at in a previous public video update, taking a look at the previous 2012 and 2016 elections and what the Russell 2000 small caps were doing going into to election day. You can see here we had a consolidation, The consolidation into the November elections resulted in a very substantial breakout. We then consolidate into the 2016 elections, another breakout. Here we are with a very similar consolidation effort into elections, and Russell, the rut, is looking rather healthy here. So things could get interesting there as well. Let's get off of this particular chart here. While we're at it, let's just take a look at the Russell 2000. And we looked at this actually also during one of our recent YouTube live stream, which, by the way, we've got some fantastic guests lined up here in the near future. We've had, John Najarian, Andrew Baptiste, Amelia Bordeaux, Alan Lax. We've had a lot of really fun guests. Julius de Kempner, who is the creator and founder of relative rotation graphs, which we utilize via Optima. The technology RRG, he actually, it's available on stock charts, it's available on Bloomberg Terminal, I believe, and of course Optima, which is another fantastic tool. But we've had him on a couple of times, and we've got some more fun stuff lined up. So we hope to see you guys over there on Todd's channel. But looking at the Russell 2000, a very unique 5-wave structure that took us into highs here back in August. We then enter a kind of a weird 3-wave correction, but it's still valid. Nothing wrong with it whatsoever. Took you kind of into the area of the previous 4th, which is often a support zone. And zooming into the 1 hour, once we completed that 24th low, once we completed that C wave just beyond equality to wave A, which is essentially considered a measured move in traditional technical analysis terms, we printed another 5-wave up, and guess what? A very attractive 3-wave structure here. Got a nice clear 5-wave subdivision in C. The overall structure took you between a 50 and 61% retracement of that wave 1. Love it. Again, watching for any sort of a 3-wave pullback. Potentially some interesting long opportunities setting up here in this market. You're not going to want to miss it. It could be very interesting. And the last chart that I want to look at here is that of the Nasdaq. And many people are pointing out the fact that if you take a trend channel that is sourced off of the credit crisis lows, they'll say, well, we just violated that trend channel. We just broke through that trend channel. Shouldn't that be indicative of perhaps overextension and the start of a massive corrective pullback? I see it a little bit differently, and let me show you why. The trend channel really, after originating or confirming kind of back in September of 18, that was your resistance point going into February of this year. It was also near your support zone. From there, we've now broken through the channel, and we're kind of back testing and consolidating in this possible wave 2. Let me take you guys on a little bit of a journey here. We've got a history lesson for you in that of the NDX. Going back to September of 1985, we have a wave 1 up and a wave 2 pullback, a smaller degree 1-2. We then have a wave 3 print right into that uptrend channel. We consolidate in a 4th wave, and then what happens? We break through, up in 1, consolidated the break of the trend channel in that wave 2 position, and we ripped higher into the 2000 kind of .com bubble, as it's often referred to as. So who's to say perhaps we are not looking at a very similar setup in that we just did wave 1, we're in wave 2, we're getting ready to rip up towards 16,000 in the NDX? Not out of the question, not out of the question at all. Off the weekly, down to the daily, this is the only major US index that's not in correction, not in consolidation. Really, and a lot of people don't quite understand this, those who are new to technical analysis, but if we look at the S&P and we go back to the weekly chart and just hide the wave structure, you don't even need the wave structure here. You can draw a trend line through September 10, and if you project it over that recent February high, that's where we ran into resistance again here in the move into the September 2nd high. So the S&P, technically, until we get like a 3,600 plus print and get out of this sideways mess, it's essentially a period of expanding volatility. You have lower lows and higher highs. It's a correction pattern unlike any that we've really seen in the S&P, dating all the way back to the late 1800s. So the S&P has really still been in correction since January of 18. We think we're getting ready to potentially leave all of this madness behind and continue higher. Looking at the Russell 2000 small caps, same situation. We're still in some sort of a corrective consolidation, potentially gearing up for that resolve higher, as I showed you on the Russell chart earlier that was comparing it to the election cycles. Last but not least, let's now look at, we'll look at the, let me go to my watch list here. It might make it a little bit easier to pop around these. The Dow Jones Industrial, sideways consolidation, lower lows, higher highs. In fact, the only index, the only major US index, which has been leading this market, is that of the Nasdaq 100, heavily weighted in tech. Even the Nasdaq Composite has broken out of this kind of consolidation or correction phase. I think it's got a lot higher to go here. So this is not a move you're going to want to miss. You can join us at tradinganalysis.com if you're interested in what we do, stock options, Forex, and of course cryptocurrencies. And let's wrap it up with Bitcoin, because Bitcoin has been on the move. And I'm not even going to attempt to put a wave count in front of you, because that's Alex's job. He does a fantastic job of keeping everybody up to speed on the status of Bitcoin and crypto overall. We do have a service specific to crypto if you are interested in trading crypto and crypto analysis, Elliott wave analysis. But really, the breakout that we're seeing here is very, very healthy for Bitcoin. And let me show you an interesting comparison. Going back to December of 2013, that's interesting. December of 13, Bitcoin sets a high. And December of 17, that's when the highs were. We've got a trend line that you could draw from that high through that high. And you'll notice that it was then resistance here, resistance here. We broke out, we turned that trend line, that downtrending resistance line essentially, into support. We then march our way up impulsively to the previous high around 1239, and then just explode up into that 19,000, 19.5 area high for Bitcoin. What are we seeing now? We're seeing a very similar pattern setting up, in that a trend line drawn off of the December 17 highs projected through the June 19 highs was resistance on the move up in May of 2020. We just broke through that. We saw a little bit of the three-wave move. It was kind of short, it was kind of shallow, so it made it difficult to say for sure that was all of the wave 2 correction. But again, we turned the downtrend channel or trend line resistance into support. Another very interesting piece of analysis here is the fact that we've broken the 61.8% retracement of the decline from the highs. We've now broken the 78.6% retracement, which you'll notice was also resistance right back there. So not only did the June highs correspond to that new trend line, or establish really, because you didn't have this trend line to anchor until you got that high, okay? But that was right into the 78.6% retracement. Typically speaking, when you get a breakthrough impulsively through the 78.6% retracement, that opens up the door to the external 1272 retracement. And I don't even want to tell you where that's at, because that's sitting up north of the 30,000 handle. Just absolutely incredible. So could be seeing some interesting moves in cryptocurrencies. If you've been interested in trading it, perhaps now's the time to get on board. Hey, traders, hope you guys enjoyed that one. We're going to go ahead and leave it at that. Questions, comments, concerns, insults, you guys know where to reach us. You can visit us at tradinganalysis.com. And of course, don't forget to check us out every Wednesday morning, 8:45 Eastern on Todd Gordon's YouTube channel. Myself, Todd, Alex, Terry, the whole TA team. We're live 45 minutes before the bell. We have a lot of fun doing it. So yeah, hope to see you on that one. Take care, and we'll catch you guys on the next video update.